Welcome back to the Deep Dive. Today we are taking a really fascinating look at the intersection of traditional finance and the crypto world.
We are.
And we're going to be focusing specifically on Ripple and its digital asset, XRP. Now, for years, this was a company that was just kind of stuck in regulatory limbo, almost forgotten by the big players.
It really was. And yet, what the sources we've analyzed are showing is that behind the scenes, there's been this quiet, massive shift in how global money is starting to flow.
The fundamental shift.
A fundamental shift. And it's not being validated by, retail hype on social media. This is serious institutional commitment. So we're diving in to figure out why this company, which spent years fighting for its life, is now being seen as this essential piece of future financial plumbing.
Exactly. That's the mission today, to understand that monumental shift. Why is Ripple suddenly moving past its legal issues, and what does that mean for, well, the entire financial system?
It's a huge question.
And there's one number we absolutely have to start with, the figure that really grabbed Wall Street's attention. We're talking about recent private transactions valuing the company, Ripple, at around $40 billion.
That figure is it's immense. When you look at that number, our sources are really clear. 40 billion is a market cap that's higher than many established decades-old banks.
Some even centuries old.
Probably centuries old. So this isn't a number coming from, speculative Reddit chatter. This is the conviction of what we call the smart money.
The whales.
The whales, the institutional investors who do months, even years of due diligence.
And it signals they believe Ripple isn't just a volatile coin, but a genuine infrastructure play, a long-term money-making machine. So the core question for our deep dive today is, why now? Why is this massive valuation popping up right now?
It's really all about one thing. The regulatory storm clouds are finally parting.
And that leads us right to the anchor that was holding it back for so long. For years, Ripple was basically trying to run a marathon with this anchor dragging behind it, that long, drawn-out legal battle with the SEC.
That is the critical context. I mean, that legal cloud wasn't just bad PR. It had enormous practical consequences.
Of course.
When the SEC is scrutinizing a company, especially in finance, every major partner, every regulated bank, they're all going to step back. They just can't afford the risk of entanglement.
No way. The compliance departments would never sign off on it.
Never. The sources are crystal clear on this. Those dark legal clouds had to clear before Wall Street could even think about coming back to the table.
And now that they have, for the most part, cleared those hurdles, it's a signal that Ripple didn't just survive the fight. It actually validated its entire business model.
Right, and the regulatory status of its asset, at least here in the U.S.
But I have to ask, and I'm sure you're thinking this too, isn't that a fragile foundation?
Yeah.
Relying on a court decision. I mean, couldn't the SEC appeal or try to challenge this again down the road?
That's a super critical point. And you're right, the legal saga isn't like 100% finalized, but the major rulings have drastically cut the risk profile in the eyes of these big investors.
So it's about probability.
It's all about probability. At the end of the day, Wall Street is pragmatic. The probability of some future devastating regulatory action just plummeted after those key decisions came down. And that drop in risk, that was the permission slip they needed.
The green light.
The green light. And we're seeing real, tangible evidence that they're acting on that permission slip. This isn't just theory. We're seeing major players like Grayscale opening up dedicated trusts for XRP.
And creating a trust is step one. It's the signal that institutions are ready to hold the asset on their books. But the really big, game-changing step that our sources are pointing to is the effort around an XRP ETF.
An exchange-traded fund. Now, for anyone listening who hears ETF and, their eyes just glaze over.
Which is totally understandable. Right, it just sounds like more financial jargon. Yeah. But let's break it down with the analogy our sources use. Think of an ETF as a giant, legally fortified bridge.
That bridge is everything. Because it connects the old world, the traditional stock market, where all the giant pools of capital live.
We're talking pension funds, mutual funds, 401ks.
Trillions of dollars. It connects all of that money directly and simply to the crypto market.
And once that bridge is fully built, all that capital can just flow into XRP. Legally, easily, securely. It becomes as simple as buying a share of Apple or Google in your normal brokerage account.
Exactly. And that immediate guaranteed access to those deep pools of capital is precisely what's driving this surge in value. It signals mainstream acceptance. It signals permanence.
Okay, so the regulatory win gives them confidence.
Yeah.
The ETF gives them access.
Right. But that access would be pretty useless if the underlying tech wasn't delivering real value. We have to look past the coin price and focus on the engine that's actually driving that $40 billion valuation.
The infrastructure.
The financial infrastructure that Ripple is building right now.
Yeah, they aren't valued this high just for potential ETF fees. It's the plumbing they're installing globally.
Yeah.
And they have two critical products that are totally redefining their relationship with big finance. Let's start with product A, the RLUSD stablecoin.
This was just a brilliant strategic move. Think about the problem from a bank's perspective. If XRP is like a super speed race car, great for instant, cheap cross-border transfers, it has one huge problem for big clients.
Volatility.
Volatility risk, 100%. If a bank is sending, say, $50 million, even a tiny price fluctuation in the few seconds it takes to transfer can mean a huge loss or gain.
That's an unacceptable risk for their balance sheet. They need certainty.
They need absolute certainty. So the race car for that specific job doesn't work. The solution.
The armored truck.
You introduce the armored truck, that's the RLUSD stablecoin. It still runs on the same super efficient ledger, so it's fast, but it is pegged one-to-one with the US dollar. It gives them that absolute stability.
It eliminates the risk.
Complete.
And the strategic beauty here, which is so key to understanding the valuation, is how it completes their ecosystem. They're basically creating this self-contained financial circuit.
It's a walled garden, in a way. If a client needs speed and low cost, they use XRP. If they need absolute stability for, say, a huge international contract payment, they use RLUSD.
And either way,
they're on Ripple's network and the transaction fees flow back to the company. It's this brilliant two-pronged revenue stream that works no matter what the client's risk tolerance is.
Okay, so the stablecoin locks in the transactional revenue. But the second product, the custody services, that seems to be about locking in the long-term relationship itself. This feels, I don't know, even more critical for the valuation.
I think it is. Custody is the technical term, but let's just call it what it is. The ultimate fortified vault.
Right.
Banks, sovereign wealth funds, these huge entities holding massive digital asset portfolios, they cannot, under any circumstances, store the private keys on a thumb drive or a sticky note. They need Fort Knox level security and compliance.
Okay, but let's push back on that for a second. I get the need for security, but every major player out there, BNY Mellon, State Street, Coinbase, they all say they have the most secure digital vault.
Yeah.
What makes Ripple's custody solution so special that investors are this confident?
That's the right question to ask. And the sources suggest Ripple's edge isn't just about the tech itself, it's about the integration and, crucially, the compliance pedigree they earned through that SEC battle.
Okay.
You have to understand, custody is the absolute first door for institutional capital. Before a bank can trade or invest a single dollar, they have to be 100% certain that the assets are safe and that the provider meets every single global banking standard.
So Ripple's pitch isn't just, hey, we're safe. It's, we're safe, and we've already navigated the regulatory minefield that is scaring everyone else away.
That's it, exactly. They solve the regulatory problem first, which makes their custody service a high-trust entry point. And once a major global bank trusts you to safeguard billions of their assets, that relationship becomes incredibly sticky.
Extremely durable.
Incredibly durable. And that deep, sticky trust is way more valuable to a company's long-term valuation than any short-term speculative price pump.
So let's put it all together. Let's synthesize this. When you look at this intense focus on infrastructure custody, the stablecoin, the ETF access, what does this tell us about what Ripple is actually trying to do? They're obviously not trying to create the next viral meme coin.
No, not at all. They are trying to replace the global plumbing. We need to step back and just appreciate how inefficient the current system is that they're trying to disrupt.
You mean the SWIFT network?
Exactly. The current global banking system relies so heavily on SWIFT for international wire transfers, and it's basically still operating like the banking equivalent of sending a physical letter.
It's a great way to put it. It's slow, it's clunky.
It's slow, it's expensive, your money takes several days to actually arrive and settle, and it has to hop between multiple intermediary banks that all take a slice.
A fee for every hop.
A fee for every hop. Ripple's tech, because it's built on a distributed ledger, is like sending an email. The money arrives almost instantly, and the costs just collapse.
The efficiency gap is just massive, and that gap is what that $40 billion valuation is betting on. Wall Street is, at its core, pragmatic. They don't really care about crypto ideology.
No, they care about efficiency and cost savings. They're looking at the future of global currency flows, and they see that this technology is just better plumbing. And Ripple is perfectly positioned to lead that charge because of its tech and its hard-won regulatory clarity.
You know, there's a really profound lesson in there about consistency. Well, so much of the crypto space was chasing speculative trends, the quick gains and the meme coins.
Right.
Ripple chose this incredibly difficult, painful path of compliance, of persistence, of working with traditional banks and regulators, not against them.
It was a long and uncertain journey for sure, full of lawsuits and doubt. But the reward for that focus is turning out to be massive. Institutional acceptance is the ultimate prize, and it's what sets them up to be a long-term utility, not just another volatile asset.
Okay, let's pivot and make this directly about you, the listener. How do we take these huge insights about global finance and actually apply them to our own lives, our careers, maybe our own investment strategies?
I think the first key lesson is just about long-term vision and persistence. It's so central to the Ripple story. We're all sort of conditioned to chase immediate results, right? Quick wins in our careers, quick returns on investments.
Absolutely, the path of least resistance.
But Ripple's journey, fighting the SEC for years to defend their core value, it reminds you that true generational value takes time to build and to prove. So if you're pursuing a goal, building a business, don't get discouraged by the big hurdles. Focus on creating that core solid infrastructure. If it's sound, the market will eventually recognize it.
The second lesson has to be about openness, about adaptability. I mean, Wall Street is the ultimate cautious behemoth, and yet it's gone from total hostility towards crypto to actively building products to integrate it.
That's a huge shift. And it requires a kind of intellectual humility, right? We can't let ourselves get so rigid in our thinking that we just reject new ideas or new tech outright.
Because what seems foreign or risky today, as this entire deep dive shows, can very quickly become the new standard tomorrow. Staying updated, especially on how tech and finance are merging, it's not really optional anymore.
Not at all. And the third lesson is really the ultimate test for assessing any opportunity, whether it's an investment or a career move. You have to look past the shiny exterior, past the quick profits.
You have to look under the hood.
You have to examine the underlying infrastructure and stability. Is the foundation solid? Just like those big investors looked past XRP's volatility and saw the stability of the custody service and the guaranteed revenue from the stablecoin, you have to ask yourself, what guarantees long-term value, even when the market gets shaky? That foundation is everything.
And I guess that leads to the final lesson, which is just good old-fashioned risk management. Even with a story this strong, the market is always unpredictable.
Always. There are always variables you can't control. And applied to your own strategy, that just means you always need a reliable backup plan.
Don't put all your eggs in one basket, no matter how strong that basket seems.
Exactly. Stability, whether it's the RLUSD stablecoin for a bank or just a diverse financial base for you personally, is what allows you to take on those bigger, adventurous risks. That balance is the hallmark of any mature strategy.
So the big takeaway here is that global finance is changing, and fast. Crypto isn't this fringe idea anymore.
No, it's becoming an integral, regulated part of the mainstream system. And Ripple, having cleared its biggest legal hurdles and built out this indispensable infrastructure, is just supremely well-positioned to ride that wave.
And with that, here's a final provocative thought for you to take away from our deep dive today. The intense focus from institutions on custody services and stablecoins suggests that for big money, the real entry point into any disruptive technology is not determined by speed or price,
but by trust and stability.
The path of least risk, not the path of maximal potential profit, is what ultimately wins the institutional game. Something to think about the next time you evaluate any great technological disruption.